Welcome to Second Take, the show that focuses on the issues behind the news. Randgold Resources CEO Dr. Mark Bristow says the gold mining industry is fundamentally broke at the current gold price of $1,300 an ounce. Mining Weekly editor Martin Creamer unpacks the story. Welcome, Martin.
Thanks, Shannon.
These are strong words from Dr. Mark Bristow. What prompted this reaction?
Well, what's happened with the mining industry is they're having to fight cycles. In 1 minute you're at $1,900 an ounce and you think you're well away, so you start, just piling on the risk. The next minute you're at $1,300 an ounce and you're at the other extreme. Then you start unpacking all that risk. So this volatility has been a curse for the industry, and they haven't actually given their shareholders a return. So he's saying, at this level of $1,300 an ounce, we bust. We broke. He's not talking about himself because, he's been a different kettle of fish where he's never bought a mine. He actually discovers and he develops. And when he discovers, he does it at low cost. And when he develops, it is difficult in Africa, but he won't develop a mine that hasn't got promise of high quality. And this is the way he protects himself, because he's a geologist. He's not going to do a marginal mine because he knows Africa is too expensive. To do that, you've got to do a lot of your innovative travel and all sorts of arrangements to get your mine built. So it is expensive. So he makes sure he gets top quality mines, or he doesn't. That ore body's got to be top quality, otherwise he doesn't actually invest in it. So he's been able to work on the basis of getting a 20% return on a gold price of $1,000 an ounce. So he's actually still profitable. He's actually in a bit of a sweet spot at the moment. But he's saying generally the industry buys in the peaks, then they get caught in the troughs with all this investment, thinking that, look, gold has got to go because of the state of the world, and then all of a sudden something happens and it reverses. So he's saying that at this level, it's bust. He's talking about the industry as a whole. And the only thing that'll happen now is there'll be less gold produced. And because the demand is still strong, as we see from the East, the Chinese, and you actually have got that demand. So it'll just be a matter of time before this works itself out of the system. But how long? Crystal ball again. How do you work out when this happens? So you've got to start working out how long is it going to take for the supply to be so constrained that people are prepared to pay more for gold, and then you sort of back in a sweet spot.
Now, if the industry is fundamentally broke, what does it mean for South Africa and other gold-producing countries?
We are no longer the world's biggest gold producer, but we're still a substantial gold producer. We used to have a capacity, I think, in the Rand refinery for far more, like 10 times more than we're producing. But at the same time, we're talking in the hundreds of thousands of ounces, which if you start doing the maths, even at this price, it's very good. And anyone who's sitting there as the Reserve Bank governor will say, hey, you better start exporting more of this stuff because we need that foreign exchange. And this is where mines are so fantastic. They give you that foreign exchange. Without that foreign exchange, you can't hedge against everything else that's happening in the country. You can't import too much, otherwise you go deeply into debt, as we're seeing our current account at the moment, not healthy because we're not exporting enough. We haven't been exporting platinum. So I think that the International Council of Mining and Metals has sort of said mining does wonders, but one of the big things is that foreign exchange earnings. It's huge. And that's where South Africa is being hurt at the moment, because its mines, including the gold mines, are just not producing at the level that they used to. Even though there is still more gold in the ground than we've taken out, we're not doing it efficiently. We've got a situation of our method of mining has priced itself out of the market. Our method of mining is labor intensive. It's priced itself out of the market. So they've got to look for another method of mining to get going. And I think we're going to have to try and emulate what other countries are doing. I was just speaking to someone now who said migrancy is actually growing in the world, because we're talking about getting rid of migrant labours. This is the labour intensive side of it, which is we've had for 100 years. He's saying, migrancy is growing, but it's of a different kind. It's knowledge migrancy. When he goes to Perth, in the week, the airport in the morning and the evening is so busy because people are being flown in and out. So they might go to the mine for 4 days and come back for 6 days. Things like go to work for 6 days, come back for 4 days. they are migrants, but they do live in migrant conditions where, you've got a little cubicle with a little bath, etc., but that'll be for a few days, and you come back to your home. It's not as if migrancy isn't there in the world. So, but what we're saying is we're going to have a different type of migrant labour, and the hostel system has got to go, and people have got to have this choice of getting back to their homes. But we need the government to come in with a public-private partnership to get transport moving far better, so that people can travel back to the Eastern Cape or Queensland and then go off to their homes more frequently, and not just 2 weeks in a year, for the whole career. So it's big impact. This low gold price has a big impact in South Africa, and we can see it in the earnings of the mines, the troubles that some of our big mining companies are having, particularly in the gold space, and not to talk of platinum, which is a different subject.
Now, talking of financing, Dr. Bristow is critical of the World Gold Council's all-in sustaining cost standard for financial reporting. Why is that?
This all-in sustaining cost was actually promoted out of South Africa. They wanted to have a better handle on what your total costs were, including capital expenditure, rather than the often quoted cash costs. So the world, which were costs not taking into account all the other sort of commitments that you had. He's critical of this, though. The World Council has gone for it, but he's saying there's no auditor that will actually audit this sort of thing, and all it does is, he claims, hide unprofitable mines. So they're talking about sustainability costs, and instead they should say, look, we didn't make a profit, and they should come out more clearly. I don't know how to take that. I think that there is an all-in sustaining cost that you can look at. He's saying, look, the auditors don't look at it that way. They've got their own international standards, and that's the way they do it. And he's not a member of the Gold Council, and he thinks it's just a way of disguising the real situation. So he's hypercritical. But I don't think that is a real issue in terms of the bigger picture here with the low gold price. But perhaps there would be many people who say yes and no on that. So, but it's his opinion that it's not on.
Yeah, it's not necessarily right or wrong.
Yeah, that's right.
What do you think it'll take for the gold industry to improve?
Look, I think greater transparency. You need to a better gold price. Which we price takers. We're not price makers. He's saying we become price makers because we produce too much gold. And he points to when he started, and I can remember in 1995 when he started, soon afterwards the gold price tanked, to like $225 an ounce, which was a huge hardship. It was at the time the Bank of England was even selling off its gold, which pushed the price down. And there had been a tradition of gold companies hedging, which means they sell their gold forward at a price.
Hoping it'll be...
And often that price is lower than what they could get at the time, and they kept on chasing this hedging idea, which some made good profits out of, but eventually people said, no, we are shooting ourselves in the foot here because we're actually overproducing, we're oversupplying this market. And there was a time when you could oversupply the market. When we were in South Africa, my dad is a miner, we ran around here, we could supply as much gold as we wanted because the surplus was bought by the central banks of the world. If you had a surplus, they were buying it up, you see, at quite a big rate. So there was no problem in selling the gold. If you couldn't, if the jewelry manufacturers didn't want it, the central banks took it. So there was always a market, and the central banks fell away. And they, in fact, started selling some of their gold, during trying periods of economic plight. And then there was just too much gold on the market, and that price fell. He's saying the same thing is happening now. There's too much gold on the market. And when we pulled back in 2001, and people said, we're not going to hedge anymore, suddenly the gold price perked up again. So he's saying that this is what's needed now, and that this will be a normal market constraint because the price is so low, people can't produce at a profit. They bust, fundamentally broke. They can't spend on exploration. They can't spend on capital expense, and we see even some of them are resigning from the World Gold Council to say we want to save some money. So they're looking to save cash everywhere. And then during that time, you don't expand, you don't develop, you try and harvest your mines, you work on development that you've done underground that costs you a lot of money, you stop that and you just harvest what you've got, which means that there comes a time when you suddenly don't know where to get your gold from. And because the grades are going down now, we've also had this problem of, the grade. He claims that the grade is actually halved. It was over 2 grams per ton, and now it's just over 1 gram. So your costs are much higher. So we're certainly in a squeeze when it comes to gold mining, and he's saying that will naturally then stop the production. And once that happens, people will then be prepared to pay more for gold because there's less gold.
So we should all buy our Krugerrands now.
Buy them now, while things are down.
Yeah. Thank you very much, Martin.
It's a great pleasure, Shannon.
That's it for today. Join us again next week for more news analysis on South Africa's mining industry.